Imagine you're about to fly to China. You go to the airport, you exchange $1,000 for the local money, but then you cancel the trip. A month later, you exchange that money back into dollars. You check your balance, you have $1,333. You just made $333 for doing absolutely nothing. Did you get lucky? No, you just accidentally became a Forex trader. And in the next 10 minutes, I'm going to show you how exactly this market works without any charts or jargon. I'm Charles, and on this channel, we simplify finance and trading so anyone can understand it. Let's get into it. Let's stick with that story. You're an American, you have 1,000 US dollars. You want to go to China. In China, they don't use the US dollars. They use the Chinese yuan. So you go to the below the change, you look at the board, and you see 1 USD equals 20 yuan. That's the exchange rate. It's simply the price of one currency expressed in another. So the math is simple here. 10,000 times 20, so we get 20,000 yuan, because 1 USD equals to 20 yuan. Now you have 20,000 yuan in your pocket. Unfortunately, you have a family emergency and you cancel the trip. You never go to China. You keep that 20,000 yuan in your drawer for 1 month. But then you decide eventually you want to get your US dollars back. You go back to the exchange booth, you look at the button again. Oh, but now it's different. The board says 1 USD equals to 15 yuan. Wait a second. The US dollar got weaker, or in other words, the Chinese yuan got stronger. When you first bought the Chinese yuan, it only cost you 20 yuan to get every dollar. But now, because it's stronger, it costs you 15 yuan to get a dollar. Let's do the math. You hand over your 20,000 Chinese yuan. The booth divides your 20,000 yuan over the new rate, which is 15. So 20,000 divided by 15, you get 1,333. You walk away with 1,333 US dollars. You just made $333. This is the essence of the Forex market. You bought a currency when it was cheap relative to the dollar. That's the Chinese yuan. And you sold it back to the dollar when it is more expensive relative to the dollar. So if the Forex market is just exchanging money, why do people call it the biggest market in the world? Because what happened at the airport happens 7.5 trillion US dollars a day. This isn't just tourists, it's big companies. Apple needs to pay a factory in China. They buy the Chinese yuan with the dollars. It's governments trying to adjust their reserves. It's investors like you and me trying to make a profit from this market. Now here is where we move from the airport to the real world. That exchange booth at the airport, that's essentially Forex market happening physically. But in reality, Forex market happens online on electronic devices, 24 hours a day, 5 days in a week. So what actually causes these prices to move every second? There are many drivers, but they all simply feed into one simple idea. People buy in anticipation that the currency will be worth more later. Let me give you some examples of what moves the market. Central bank decisions. When the Federal Reserve raises rates, the dollar often strengthens because investors want higher returns. Inflation. If a country's inflation is out of control, the currency usually loses its value. Geopolitics and war. When there is tension between countries, investors flee to a safer haven. Currencies. Elections. Political uncertainty can cause currencies to widely swing. Sentiment. Sometimes people buy just because of how they feel. If they're feeling good, they're more likely to buy into high beta currencies. And the opposite is true. Now here's the most important thing to understand. In the travel example, you exchange your dollars for the yuan. That's exactly how the Forex market works. But with one key detail. Currencies are always traded in pairs. Why? In order to buy one currency, you have to sell another currencies. You can't just buy the Japanese yen alone. You're often selling another currency in order to get another currency. That's how it works. Every Forex trade is a pair. The most popular pair is the euro against the dollar. If you think the euro gets stronger, you buy the pair. You're simultaneously buying the euro while selling the dollar. If you think the euro gets weaker, you sell the pair. So you're simultaneously buying the dollar while selling the euro. That's how Forex works. So let's go back to our travel story one last time. You made 333 US dollars because the yuan strengthened against the dollar. What if it went the other way? What if it moved from 20 to 25? 20,000 divided by 25 equals to $800. You would have lost $200. Forex is the largest market in the world. Over 7.5 trillion US dollars traded in a single day. But it's also one of the riskiest. You're betting on the stability of an entire country, influenced by everything from central bank policies to election to global conference. But if you ever trade Forex, remember this video, the fundamental principle never changes. You are buying one currency, selling another, hoping the movement goes in your favor. If you don't understand the driver behind that movement, you're gambling, you're not investing or trading. That's the Forex market in its simplest form, from an exchange booth at the airport to a $7.5 trillion market. The core idea stays the same. You're buying one currency, selling another, profiting from the movement. If this video helped you understand Forex a little better, hit the like button and subscribe so you don't miss the next breakdown. And leave a comment. Let me know what currency you'd like me to cover next. Thanks for watching. I'll see you in the next one. Peace.